Hey everyone, it's Leon from Leon's Money Flow. At 25, I have a portfolio that's already paying me hundreds of dollars each month, and today I'll be showing you guys exactly what it has. As a quick disclaimer, this video is for informational and entertainment purposes only. This is not financial advice, and be sure to always do your own due diligence and research when making investment decisions. To quickly recap my investing journey, I have been in the market since 2020, and I started out and was a traditional growth investor up until a few months ago when I discovered income investing and transitioned to an income-based portfolio. I really enjoy seeing the monthly cash flow that I now get with my portfolio, and check out my last video for a whole bunch more reasons and benefits. Before I hop into my portfolio, you'll notice that all the funds are covered call ETFs. A covered call ETF is basically a fund that sells call options on the stocks that they own. A fun fact is that there's actually uncovered calls or naked calls if the fund doesn't own the stock. A covered call is like renting out your stock. You'll be receiving an options premium, which is your income, but you'll agree to sell your stock at a certain price. Let's hop into a quick example. Let's say that I have a pair of sneakers and I want to sell them. Now Bob comes along and he's a shoe reseller that wants to buy the shoes off me for $2,000, but he says, "Oh, give me a week, I need to think about this and talk to my wife. But I am interested in the price, and so I will give you $50 as a deposit to lock it in." Now for me, I get to receive this $50 as income, and it's the options premium. So now let's go over the two scenarios. At the end of the week, maybe the shoes skyrocket in value and it's now worth $10,000 on the resale market, and so Bob obviously wants to buy these shoes off me at our agreed price. And so now I lose the shoes and the potential upside, so that $8,000 difference that I could have made if I sold to someone else. On the flip side, if now the shoes are worth $1,000, well then Bob would not be interested in buying the shoes at all. But remember, in both cases, I was able to receive that $50 deposit, and I keep that as income. Here is my portfolio. So it consists of 9 different covered call ETFs, and I broke it down into 4 main categories: S&P 500 index holdings, NASDAQ 100 index holdings, Magnificent 7 holdings, or concentrated NASDAQ if you want to put it that way. Magnificent 7 is basically the top 7 high performing US stocks, like Alphabet, which is Google, Amazon, Apple, Broadcom, Meta, and Microsoft and Nvidia. So yeah, those are my holdings there. And then I also have 10 to 15% of my portfolio in Bitcoin holdings. So I have these 3 here. Alright, as you can see, I really like index investing. I think it's great and easy way to start, and it's a staple in anyone's portfolio. So index investing is, yeah, as I said, easy to start. It contains automatic rebalancing and great diversification. So the first holding that I want to go over is USCL, which is the Global X Enhanced S&P 500 Covered Call ETF. The weight of my portfolio is 13% with an average cost of $22.38. And I get about 13% a year on this. This video would end up being an hour if I dove deeper into each fund's strategy and holdings, so I won't be doing that here, but do let me know if you want another video on this, and I'll create that in the future. So I'll move on for now. Next is Estee, which is from Hamilton ETFs, and it pays me about 18% almost, and it pays bi-weekly. It's a 0 DTE ETF, which means that it writes daily cover call options. Next up is my NASDAQ 100 holdings, which is QQCL and QDAY. QQCL is also from Global X. It's like USCL, but it's for NASDAQ instead of the S&P 500. And that pays you almost 15% a year monthly. And QDAY is similar to Estee from Hamilton, and it pays me about 19.3% bi-weekly, again, similar to Estee. Then I have my higher yield ETFs, which is like concentrated NASDAQ. So I have HHIS and Big E. Well, Big E is actually a recent trade. I just bought it the other day as it began trading. So I only bought a little bit. It represents 2% of my portfolio weight. So HHIS is paying me about 23% a year monthly, and Big E pays me about almost 30%, and they said it's going to be bi-weekly. So Big E is from Evolve, and HHIS is also from Harvest. Lastly, I move on to my Bitcoin-related holdings. The first one I have is MSTE, which is not investing in Bitcoin per se, but it's investing in MicroStrategy, which is the first publicly listed, I believe, and biggest Bitcoin treasury in the world. So if Bitcoin price goes up, MST would go up a lot too. Next is HBTE and HBIX, which I don't have a lot of weight in my portfolio right now, but I am considering to add to it. HBTE is kind of like investing in the Bitcoin miner companies. So I think of it like back when there was that gold rush, gold miners did just as well, if not better, as gold companies itself. And so that's why I have a little bit, and it's paying me 22% a year. And I have HBIX, which is just purely Bitcoin, but it's cover calls on it, and it's paying me 20% a year. So all of these funds actually are cover call ETFs, and they all include 25% leverage. Actually, Big E, which was just announced, has 33% leverage. Let's do a quick comparison of a cover call ETF versus a regular growth index fund like VFE. This was a comment in my video last week, actually. So I want to compare these. So there's this website, which I will link down below. It's great for comparing ETFs. And so I want to compare the performance of USCL and VFV And then let's say that we'll start from January 1st, 2024. So look at the past year and almost 2 years, a year and 9 months. So the performance with dividends reinvested is very similar. It's 45.74 versus 46.8. And then this is the performance if you don't reinvest the dividends, right? So as you can see, the performance is very similar. And why is this? So traditionally, a covered call ETF, by how it works, it lowers your upside, right? And so like if we're comparing apples to apples, a covered call ETF should never outperform a growth ETF. But these Canadian fund managers, they're pretty smart, and they use a little bit of leverage, which is not a bad idea, because if you believe the market goes up in the long run, leverage is great. And it's not too much, but it's just enough so if this was covered call ETF and this was index ETF, like a growth one, like VFV, so covered call would lower the returns, and the volatility too. But then the leverage would bring it back up since 25, so the returns are the same or pretty similar. I wanted to give you guys a peek at my portfolio today so that you can see how income investing looks like. And hopefully this gives you some ideas on how you can start your own. Remember, what you do with the monthly cash flow is entirely up to you. You can reinvest and compound your returns, or you can use them to pay your daily expenses like rent or travel. This flexibility is one of the reasons why I love income investing. On a personal note, I live with a medical condition that gives me tremors throughout my body. And so throughout this channel, I want to inspire you guys to see that no matter the obstacles, you can still learn to invest and build the life that you want through financial freedom. On September 21st, which is next Sunday, I will be attending the Blossom event in downtown Toronto, which means my next video will probably come out the following day, which is the Monday. I would love to connect with you guys for those who are attending as well. These videos take me a lot of effort to make, and if you enjoyed, please support this video by giving it a like and subscribe to the channel. Comment down below what kind of income investments you are interested in. And thank you guys so much for watching, and we'll see you guys in the next video.